SpaceX, the rocket company founded by Elon Musk, will be going public on Friday and is expected to become the largest initial public offering, or IPO, in stock market history. With the sale of more than 555 million shares, Musk and the company are looking to raise roughly $75 billion. That would raise the company's valuation to about $1.7 trillion, automatically making it the world's most valuable publicly traded company. NASDAQ and larger index funds will also allow trading and investing in this company much earlier than normal, within 3 weeks. Individual investors alone have already requested more than $70 billion worth of shares. There are lots of questions about all of this, and for more, we are joined now by Ron Insana, MS Now Senior Business Analyst and author of The Message of the Markets on Substack. Ron, it's always good to see you, especially on a day like this as we await this IPO. What is it about SpaceX that investors are willing to value it at a level we've never seen before?
Well, I think to give Elon Musk a great deal of credit for being an innovator and a business genius, if you will, having taken over Tesla in its early days, having built out Starlink, which is one of the key components of SpaceX going public, and having very successfully, built and launched rockets into space at a fraction of the cost that we've seen others either attempt in the private sector or even, in government operations as well. So they're banking on his vision of the future, where we're going to have data centers in space that will provide power for artificial intelligence operations, and hoping that he can grow into that $1.7 trillion valuation, which might actually be larger tomorrow once the stock starts to trade, and deliver the types of revenues and profits that would support a valuation that high.
Well, right. After reading the prospectus, my question to you was, are investors buying the company as it exists today, or a vision of what it could become? And at what point does optimism just become speculation?
Well, I mean, I think the two go hand in hand, and they are certainly buying the vision. They are not buying the company as it exists today, with about $18 billion in revenue, and last year lost about $4.2 billion from operations. So, no, this is not the type of company, if you look at it from an earnings perspective, that you would accord a $1.7 trillion valuation. They're hoping that they can grow into that number, as some other companies have, obviously, whether it's Microsoft or whether it's Google's parent, Alphabet, NVIDIA. That's happened over an extremely long period of time. This is happening much more quickly. There are concerns, of course, that this is, part of a speculative frenzy that's going on with anything associated with artificial intelligence, and that the valuation on this, which, when taken in sum, is larger than the market valuation of all the IPOs I believe we've seen since the year 2000. So this is a very big deal, and people are going to make their bets and see whether or not, in the long run, that vision will be fulfilled.
Well, right. On your Substack and on your TikTok videos, you've been warning retail investors to be careful. What should regular investors know, especially folks who are interested in buying shares, or at least trying to get shares?
Well, if they've already gotten an allocation, they've gotten that allocation at the price of $135, which was set officially today. What often happens, and we've seen this, the chief investment officer at Truist pointed out that, from the top price that you see early in an initial public offering for hot stocks like this, whether it was Meta or Alibaba or some of the other big tech names that we know, a year later, those stocks were down on average about 55%. So, there are some restrictions on flipping for individual investors, which means, buying it and selling it immediately after the IPO. But they should be prepared for a fair amount of volatility, unless you see just a surge in revenues, a surge in profitability at SpaceX that would support the valuation that may exceed $2 trillion tomorrow. We're not quite sure exactly where it's going to open. Some estimates are as high as $165 a share, which would provide individuals with an instant profit. Remember also, there are a lot of early investors who are taking profits from their initial investments in SpaceX and the other components of that company. They too are exiting. So you don't want to be the bag holder if indeed this does not live up to its expectations.
Meantime, OpenAI and Anthropic are also preparing to go public. Are we witnessing the beginning of a new AI investment cycle similar to previous technology booms, or is this something else entirely?
Well, I think we're in the middle of one. And again, this already dwarfs kind of the capital requirements that we saw, even in the build out of the railroads in the 1870s in the United States. This is an enormous capital commitment. At least this year alone, we'll see about $800 billion put to work for data centers and other AI infrastructure necessities. Some are estimating that we could see $1 trillion spent next year. Now, whether or not that comes to pass remains to be seen. The one caveat I'd put on this is that it's not just these companies selling equity in their firms to raise money. They're also using a fair amount of debt, which again, if the companies don't live up to their profit and revenue expectations, we could see a financial market event down the road if they cannot service that debt or if they don't meet earnings expectations, that could harm their stocks rather significantly. So I think individuals really need to do some serious homework around this and make sure that they're not in the midst of an investing mania and instead making very rational decisions about how much money they allocate to these AI plays.
Ron Insana, MS Now senior business analyst and author of The Message of the Markets on Substack. Ron, always a pleasure. Take care.
Same, Geoff.
Support journalism you trust. Support PBS News. Donate now, or even better, start a monthly contribution today.